With regards to underwriting and the lender selection process, we do what we call a full underwrite internally, where we initially get a package in. We have a safe and secure DocuSign upload portal that we send out to our clients with the application, so they don't have to worry about sending through email. Everything's safe and secure. We have a lot of technology that we're taking advantage of now, where once we put everything into the system, we drag and drop the statements and everything is automatically scrubbed and goes into our Salesforce CRM software for management to do an overview, where we're looking at the average bank balances, the total monthly deposits, transfers, negative days, anything that's relative to what our lenders are looking for in the lender criteria. So this is how we determine which lenders are going to be the best fit. What also helps us determine that is what the client's needs are, right? It always starts with the client needs, how much money they're looking for. And then on the other hand, it's what they actually qualify for. And then it's our job to try to set up realistic expectations with the client. We give them a really good understanding even before we submit it. We can tell how much they're going to qualify within a good range, and then what type of rates and terms that we expect to see and what type of products that may be available to them. So everything is pretty much done digitally with software, and it's a very fast process. And then once we determine everything and set up the expectations with our client, we then go to our lender selection process, which is also done through API submission. So we get them in instantly, right? Everything comes in, it's digitally scrubbed, and the process is just like a well-oiled machine with regards to submissions. Yes, so once everything comes in, our funding desk will take the documents, they'll put them in what we call money thumb, is what we're using to scrub out the statement information. Once it goes into Salesforce and we have that information there to view, looking at existing debt, number of deposits like we spoke about, that's when management is looking at the deal manually. We'll actually look at the statements, we'll look at all the information that we have and all the data. We're gonna look at what the customer's needs and requests are, and then that's when we go to the lender selection process. So we're looking at everything manually. But what's happened is we don't just have to look at the bank statements. All that information is being extracted out digitally for us exactly the way we need to see it, as an overview, giving us the monthly averages for the 3 to 6 months and everything else we need to see. So it assists with the manual underwrite, if that makes sense. There's several examples of deals that come in that may not be qualified for what the clients are looking for. Maybe they want a very low interest rate line of credit, but they already have too many loans or too much debt existingly, or they come in and they have a couple negative days on their bank statements, and that may disqualify them for certain products that may be available, that if they didn't have any negative days and had better bank balance.